Welcome back, and corporate conversations continue here on ET Now. Thanks for staying with us. We have Mr. Pralay Mondal, MD and CEO at CSB Bank. Now, this is not a bank which is growing at 15 or 20%. This has been a bank which is consistently doing growth between 25 and 35%. Mr. Mondal, first off, the rally in the stock price has been extremely sharp. I wish to congratulate you that investors are rewarding you for the kind of performance that you are putting up. But talk to us. 2,500 crore is your growth in AUM, absolute terms, give or take a few crore. And the entirety of that 2,500 crore is coming from gold loans. Is this a very large risk? If gold were to come off substantially, does your growth get impacted?
Good morning, Ash, and
Good morning,
Happy New Year to you and your viewers.
Wishing you a very happy 2026, sir.
Thank you. From a growth perspective, let me put it there. I mean, you talked about the market and stocks. Our job is to only execute and do our job and let market do whatever they want to. But from a growth perspective, I think we have grown two businesses pretty well this quarter. One is the wholesale part of the business, and one is gold part of the business. Because if you look at it, gold is 46%, which is roughly 50% of our portfolio. Then other portfolio would have also grown equally well. Now, coming to the risk factor which you're talking about, yes, gold prices has been reasonably elevated for the last fairly many quarters. But the good part is that we have taken risk mitigation in terms of what we need to do. And our LTV overall is somewhere around 60% or below at this point of time. And we also do our risk analysis in terms of sensitivity analysis of if there's a 5% drop or 10 or 15, 20% drop, and see where we are. Also, what happens is this LTV includes the interest rates in that, the interest gets added. So to that extent, that kind of a huge margin is there. And these are all short-term book. These are like 6 months, 1 year kind of a book. So from a risk perspective, we are pretty well covered. But yes, I mean, we have to build up the other businesses. The wholesale business is picking up pretty well. We have put our entire core system migration and other systems in place. So now retail will also start picking up. And of course, the most important thing is how do you build the deposit franchise? And that's the game which is going to be playing out in the next 2 to 3 years. And that's what will build the bank for future.
Right, Mr. Mondal. I'm trying to figure out what the downside risks to this growth could be, because such a fast pace of growth. Now, your loan to deposit ratio, if I'm just trying to pull that out, it's around 90%. Is that a concern? And is deposit book accretion proving to be a challenge?
Harsh, the deposit book accretion is a challenge from the entire ecosystem because what's happening in the macro, right? And all the banks are going through a little bit of a challenge on the deposit accretion. The systemic deposit growth is much slower than the asset growth for the last few quarters. And hence, to that extent, not only us, we are a small bank, even medium and large sector banks are also going through the similar challenge. So there is no uniqueness to that to us. Having said that, on your question on the CD ratio, yes, we are a little higher than 90%. Our comfort zone is between 85 to 90. But the reason we are still quite comfortable is because there has been a large borrowing book, FCY borrowing we had taken from IFC and HSBC and some of the other banks. So that gives us that cushion. We are also sitting on fair bit excess SLR. So to that extent, from a liquidity perspective, our LCR is quite comfortable. So that way, from that perspective, it's not an issue. But yes, going ahead, every quarter, every bank has to focus on deposits, and so will we. We will also have to do the same thing.
Absolutely. Mr. Mondal, therefore, can I, with great comfort from an investor lens, say that LDR will not impact your loan growth?
No, it will not. Okay. LDR will not impact our loan growth. And we, of course, will not take any liquidity risks, because when you are growing by 29% this quarter, last quarter also we grew by similar kind of a number, but our guidance is between 25% and above. So to that extent, we have fair bit of margin between what we are kind of guiding the markets or straits and vis-a-vis where we are today. So we don't have that challenge at all.
Okay, Mr. Mondal, my sincere apologies. I'm going to have to pause you here. I have to take a committed break, but I'm going to come back straight back to you, ask you a couple of more questions, and then let you go.
Sure.
Thank you so much for staying put. And viewers, thank you. This conversation will continue. Conversation with Mr. Pralay Mondal of CSB Bank with regard to the growth that the bank has clocked, 29% YOY, very, very strong. Now, sir, you know, one of the factors that impacts your margins, and your margins have come under pressure till the end of Q2. I'm not asking you for forward guidance. What I'm trying to get to is direction. In terms of your CASA, it's not seen a lift now for nearly a year. In fact, your CASA absolute number has actually fallen, which kind of pressures margins, right? Is there a plan? Is there a thought process behind trying to pull up your CASA number?
No, you're absolutely right, Harsh, that we have not done great on the CASA kind of a franchise. And the reason for that is that we were going through a tech transformation. We didn't have the right kind of CASA products and the processes. I'm being honest about it. And that is something which I said that we are building it. It will take another 12 to 18 months to build those and get those customer acquisition going. And it's not the first time I'm saying this, I've said it before. And what we don't do is we don't do higher interest rate CASA and those kind of stuff, or quarter end kind of a management. We don't do all that. We just say this is what it is. So overall, I think our CASA growth has been around 3%. And hence our CASA ratio is somewhere a little around 20.4% or something like that. But that's the real journey which you have to take it forward, because now our wholesale franchise is kicking well, gold franchise is kicking well, SME is doing well. Now the liability CASA franchise, which requires customer acquisition, product processes, etc. So we have just launched our new core banking with 52 surround system with new products and this thing. And all of these products are going to get launched in the next 12 months. So now the real bank's retail journey on the CASA franchise will start. But as you know, that these are no shortcuts to it. It takes at least 18 months to build that franchise, and we are at it.
Right. And Mr. Mondal, give us therefore what the outlook with regard to CASA growth will look like. As now you've said that this is a pain of the past, do you believe that the next 12 months, the CASA growth will largely mirror deposit growth and the deposit growth will largely mirror loan growth? Is that the aspiration, or is that the kind of thought process and journey you plan to take?
Yeah, I think broadly, what you said is correct, that eventually when you are at a LDR of around 90%, broadly the deposit and the asset growth has to be similar. And CASA, I think it will come little back-ended in the next 12 months, but come 12 months from now, I think our CASA growth will be similar to our deposit growth. But for the next 12 months, our deposit growth will obviously, if you have to grow by anything above 25% on the asset side, we have to fund it with deposits. And as you know, that we still don't have those CASA products. So given that, I think we'll still be a little bit more dependent on deposits for the next 12 months. But FY27 onwards, we'll see CASA mirroring kind of a deposit growth.
And with regard to loan growth, you're starting to open up quite a few verticals of loan growth. You've relied largely on gold loans. How is that journey playing out? And when do we start seeing an impact of that on your loan book as a whole? Or are we already seeing it, and am I not seeing it visibly?
So no, there's nothing you can't see it. Of course, you can see all the numbers,
Sure.
but giving you a little bit more flavor on that, on the corporate banking side, we were largely on the financial markets, but now the corporate banking and the mid market has started picking up pretty well, and we have done very, very well out there, and we'll continue to do well. We've got a fantastic team. We are putting a lot of products and processes out there, and that is pretty satisfying what we are doing, and we will continue to see that momentum growing on the wholesale side. SME also we are doing pretty well, but this year we have been a little cautious because of various things which are happening, including some of the global trade issues and all of those things. So we are just a little cautious on SME. That's why this year we are not growing that much, but our ability to grow SME is clearly on. On the retail side, obviously it will take a little bit more time because we need customers, we need the products, we need the processes. And that's where the retail will come a little back-ended. And one thing what happened this time is the gold, because of the regulatory reasons, the this the businesses which are repledger businesses, we have stopped it completely on an incremental basis. So given that that portfolio is falling, which is generally put under the retail, and hence we are seeing a degrowth in retail and growth on the gold loan side. But that is a replacement of a gold loan by gold loan. But instead of repledger, we are doing direct to customers. But eventually the retail also will pick up, but FY27 onwards, once our CASA franchise starts picking up.
Okay. Thank you so much, Mr. Mondal. Firstly, taking out time from your busy schedule.
Well,
I know you've
SME
just
were
gotten back from
cautious.
a vacation. So thank you so much for taking out time and speaking with us.
Thank you. Thank you very much. Thank you. Have a good day.
Right. With that, what we'll do, viewers, is slip into a very short break. By the way, before I do that, let's quickly pull up the stock price of CSB Bank. While it's down 5% today, if I were to just contextualize this, there was a 13% run up in the stock price yesterday. So that is obviously to be kept in mind when you're looking at the 5% downtick today. Just wanted to kind of highlight that for viewers. But what we'll do is slip into a very, very short break. We'll continue on the other side. Stay with us.